Wonderful good day, ladies and gentlemen. Precious Metal Summit 2014, and with me here is now Condor Gold, a company working in Nicaragua, and Mark Child, the chairman and CEO, will give us an update about his terrific company. Mark, thanks for taking the time and being here.
Good to see you again.
Yeah, bumpy markets. We just said it already. You are even wearing a tie in those markets now, as I've never seen wearing your tie.
Yes, it's a sign of conservatism.
It's getting serious. Okay. Well, Condor Gold, we already did some interviews with you, and of course about your fantastic company. What happened 2014? Give us a short sum up, please.
In 2014, we've been focused on doing 11 studies for a pre-feasibility study. So we've been in study mode. We haven't been drilling. We spent roughly $2 million in different studies to produce a pre-feasibility study, which should be out next week.
Okay, fantastic. I saw already on your website that the IFC moved in on your latest finance. How happened that? I think that's a big sign of trust.
It is. They're very detailed. We've just raised 6.4 million sterling, or 10.4 million US dollars, which is a great achievement in today's difficult markets, and a great vote of confidence in the asset and hopefully also the management. The IFC took about half of that, and the IFC conducted 3 site visits from their senior geologists and a couple of their environmental and social people. The IFC, as you know, is part of the World Bank. They support mining, but when you sign a subscription agreement with them, they want you to comply with the IFC performance standards, which basically means that you're going to do everything in a safe, secure, environmental, and professional, social manner, which is what we'd like to do as a listed company on London stock market anyway.
Definitely.
It's their first investment in mining in Nicaragua, so it's also a vote of confidence in Nicaragua. And they have said to us that they love the asset. They think it could be significantly bigger than it is. They're there to support us for the long term. And when we go into mining, that they would like to lead the bank syndicate for the bank debt. So the World Bank would also, through the IFC, would be involved in bank lending as well.
Wow. I think that's a big
what they would like to do.
Oh la la.
That's provided we get an attractive feasibility study out and so forth. But providing that's all right, they would like to be involved all the way, and they'd like to see a mine up in Nicaragua.
Great. Yeah, of course it would help the country, not only for tax reasons, but I think also for employment reasons, because there's not so much in Nicaragua to employ people, of course. And I think mining is one, beside tourism, it's one thing which really would help the country, to get in a better shape here. Right?
That's correct. I mean, gold is the second biggest export, and B2Gold in Canada is the biggest producer. They produce 200,000 ounces of gold there at operating cash costs of about $550 an ounce on average. So it's a mining-friendly jurisdiction. They let you own 100% of everything. You can repatriate your dividends. They're not trying to take 10% carried interest. They see it supporting employment. And you're right, and Nicaragua is the poorest country, or one of the poorest in South America, with about 35% beneath the UN poverty level. So this will help foreign direct investment. And employment, and then taxes, and the government get a 3% royalty and corporation tax. So there's a lot of benefits that mining can bring to a poor country.
Yeah, of course. Great. Let's come to your project, the La India project, of course. And as you said, you did 11 studies. You did a lot surrounding pre-feasibility, going towards feasibility, of course. Can we go a bit more into detail, as I think you have now 3 scenarios coming up, right?
That's correct. We have 2.4 million ounces of gold at 3.9 grams. That's the headline number. That's all to 43101 standard. And we have 1.1 open pittable within that, and the balance is underground. We have about 1.1 of indicated within that 2.4 million. So within the pre-feasibility study, we can only use indicated ounces, the higher category, which your viewers will know. And within the main pit, La India open pit, we have 840,000 ounces of indicated. Once we put the pit shells around that, they're slightly smaller. We're using a $12.50 pit shell. We can only use indicated ounces, as I've said. So that'll give us about 80,000 ounces per annum for 7 years of reserves. Our all-in sustaining cash costs will be about $750 an ounce. So
wow, that's phenomenal.
that's great. That's really good.
Oh.
Our open pit grade, I should say, of 840,000 ounces is at 3 grams. So that's a really high grade open pit, which is why we get the low all-in sustaining cash costs, I should say, of 750. But that only shows 840 is only 840 out of 2.4 million, so it shows a portion of the project. We will then have 2 PEAs as annexes to the pre-feasibility study. So the PEAs, or preliminary economic assessments, are to the lower level of confidence, and we can use inferred ounces. The first one will show what happens if we convert inferred open pit ounces to indicated, and that would take the total open pit production to 100,000 ounces a year. And the second PEA will show what happens if we do underground mining only on La India and America veins. We have other areas, about another 500,000 ounces of underground, which we're going to exclude from this PEA study. So we're being prudent and conservative, but realistically, the addition of underground will add 130, take the total production up to 135,000 ounces for about 9 or 10 years. So when we, just to summarize, when we put the PFS out, it'll have a PFS base case of 80,000 ounces per annum. It'll have a PEA open pit, that's all open pit, PEA open pit adding in 20 to be 100,000 ounces. And if we add in the underground, it gets to 135,000 ounces. In addition to those 3 scenarios, or for each scenario, there will be 10,000 ounces of artisanal minor ore, which we can add. So
that's certainly high grade.
And that's all high grade, 8-9 grams. So it'll be very profitable for us and for them, and we can pay them a lot more, and we can close down some mercury arastas, which are in the district. But that we'd have to do, the government want us to do that to clean up the environment. And if we centrally process that, you're really talking then, the 3 scenarios would be 90,000, 110, and 145,000 ounces.
Which makes the cost situation even better.
Yeah, it does a bit. And so it's an attractive project. We're in a mining-friendly jurisdiction. The government's been incredibly supportive, which is good news. And so that's how the PFS and PEAs will look when they're out next week.
Great. Where do you see a possible capex then? Do you have already any ideas?
Yes,
on that?
We've
because you are quite far.
Advanced now. For the PFS, we have to have capex numbers, and we have detailed capex for the feasibility. It'll be around about 120 million.
That's not that much.
To put up the base case of 80,000 ounces. That includes putting up the plant, the waste, the tailings, land acquisition, power, infrastructure layout, and contingency. So it demonstrates that we can get in. I think one of the important things when you've got high grade, and if we got 3 grams and someone else has got half a gram material, they're moving 6 times more rock than we do, because we got 3 grams. So our base case plant will be 2,300 tons per day, which also means that the capex is smaller. So if you have a plant that's 6 times bigger, it's it's
larger mills, everything.
Mills. It's a lot more expensive if you've got a 14,000 ton per day mill to put up as opposed to 2,300. So the capex is less, partly as a function of the size of the capital equipment. The second reason the capex will be less is that we're going to get involved in contract mining, where we subcontract out the movement of the mineralized ore and the waste.
On guaranteed prices, I presume.
That's right. So we've got 3 contract quotes that have come back. Now, in this part of the world and in Mexico, where labour costs are low, there's quite a big industry in moving rock, basically. And B2Gold and Nicaragua use contract miners, and so do people in Honduras and Panama, Mexico. So we're going to do the same, and that means that we don't have to pay for a mining fleet. If we had to pay for brand new mining trucks, it can be very expensive. So that also helps keeps our capex down, which in these markets is, of course, what people want to see, a route to market of low-cost capital expenditure, which results in a mine with low all-in sustaining cash costs.
Yeah, especially
Condor will be able to deliver.
Absolutely, and especially as you have the IFC already in the backyard and in the background, and they already told you, hey, we support you also until production. I think 120 million should be really manageable, shouldn't it?
I think so, but we're in difficult markets. But yes,
of course.
It should do.
And but it should clear up, hopefully.
Yes, we hope so. I mean, we certainly have one of the more attractive natural resources out there, gold deposits out there, and in better times, I think that we'd still be drilling because the resource is open to depth.
Of course.
And it's open to south of India. We'd had some fantastic trenching earlier this year before the summer on Reltonag cruise. We've flown the whole area of geophysics. We've got 8 different targets. So it's a highly prospective project. So the other part of the strategy, apart from showing the economics on the base case and the 2 PEAs, is also to show that this is a big gold district. We might have another 1 or 2 million ounces there. So we don't want to lose sight of that. And part of my juggling act now, once I get the pre-feasibility study out, is to progress the studies through to bankable feasibility, but at the same time demonstrating we've got a much bigger project, which I think the market and the trade want to see as well.
Oh, absolutely. I'm sure on that. Great. Well, Mark, thank you very much for that, and I want to see you next time without a tie, because then we have a better market.
Okay. Let's hope so.
All the best for that, and we keep fingers crossed, and it looks like you are definitely on the right path, and with such strong partners, keep it going and look forward to interview soon.
And I think that's an important point you last made, is that we're fully funded now.
Exactly.
12, 18 months, 2 years if we want to be. And that de-risks it from people thinking, is there a big overhang? Are they going to come to the market? We don't need to.
No,
we just
you
got
don't
$10
need
million
to.
in.
Exactly. Yeah, you have the money in the bank now, do the right things, and advance it further, and we want to see you into production soon.
Thank you.
Thank you very much, Mark. Thanks. Yeah, ladies and gentlemen, it was Mark Talty, Chairman and CEO of Condor Gold. Well, you heard it. First of all, the IFC stepped in. I think that's a super big sign of trust. And of course, they did over $10 million in financing, so they are cashed up. They can fulfill all their programs until, feasibility studies. They can do their scenarios. You heard it, 3 scenarios in the pre-feasibility, and they add up the ounces. And of course, they convert from the inferred to the measured, and also, of course, into the indicated. And I think the scenarios look quite well with $750 all-in sustaining cash costs. That's outstanding. And we are sure he's going to make it. Have a look at the company. Thanks and bye-bye from Zurich.